Hello, July. Happy July 5th, the day after the 4th of July. I hope you had a great 4th of July. I, for one, got way too much sun. As you can tell, my skin is sunburned. In fact, I was grilling yesterday and I was facing right in the sun's direction. We had umbrellas up, but for whatever reason, I did not have them on me. So I've got a nice healthy tan, but I wanted to just say hi after the 4th of July, getting ready to take a short little trip. Going to be heading actually to New Mexico. We don't really go there very often, but there's a neat place in New Mexico that we like to go to, do some cycling and some swimming pool action. And we're going to have some our kids as well as some friends of theirs over. But I wanted to talk a little bit about something that has been coming to my attention lately. You know, sometimes, and I don't know if this has ever happened to you, but sometimes you have something that comes in your life that you don't expect that's a good thing. And one of the things that we've been seeing is people are having an opportunity to put a lot more money in tax-free savings. So let me back up a little bit. So for a long time, most people have 401k plans. Most people put money into those types of kind of tax deferred plans. Tax deferred means you put money in, you get a current tax deduction off your income. So you basically lower your taxable income now, but then when you pull that money out later, you have to pay tax at your income tax rate later on down the line. Really, 100% of that money is taxable. Well, quite a while back, there was a new instrument called a Roth IRA that allowed you to have tax-free money. As long as you follow some rules, that money grows tax-free and forever stays tax-free. And that's a big deal, especially if tax rates go up. And over time, that could really add a lot of value for you. So anyhow, for one of the ways that they kind of keep a lot of people from doing this is there's rules that cap the income level. So if you make too much income, then you can't put money into a Roth. So a lot of clients, a lot of people just generally couldn't put money into a Roth and they just avoided them. And but one of the things that kind of has happened, and kind of this backdoor has happened, a lot of people are not taking advantage of, is that their companies are adding Roth 401ks to their plan. So you can choose whether you want to put it into a Roth or whether you want to put it into the tax deferred money. And what's interesting about that is that you can actually, by using a little simple technique, you could actually exceed the maximum that you can put into a tax deferred amount and go to the overall maximum. It's called a Section 415C maximum. And I think it's something like $45,000 that you can do. But you could overfund your retirement account and then with some after-tax dollars and convert that, the excess, into a Roth, which means that you could, even if you have high income, you can put money into a Roth, which is really, really great because most people can't do it. And a lot of times, or I should say a lot of people can't put money into a Roth, but a lot of times what's interesting is that the Roth minimum is really small, or the Roth maximum, if you just do a regular Roth IRA, it's really small. But if you can do it into the Roth 401k, it's actually a bigger number. So you're actually able to put a lot of money every year, a pretty good amount of money every year, tax-free, and max out your tax deferred. You have to subtract out whatever your company is putting in there out of that maximum. But you can go to the biggest maximum, Section 415C maximum, overfund it and put the rest of that money into tax-free money, it's like finding free money and tax-free money. And I think a lot of people are not doing this right now. And so check out your company and see what your plan has. See if they have a 401k. If you're in a higher tax bracket, if their 401k allows you to put it into a Roth and you can choose, and depending on which company you work for, you could actually immediately transfer that money over and convert it so that you get the tax-free money and you don't pay any tax on that conversion. So let me explain something. When you overfund that tax-deferred part, basically what happens is that money is after-tax dollars, and when you convert that to a Roth, there is taxes on the gain from when you invested that money to when you convert it. So it's really important that you convert it right away. And there are companies now that are allowing you to quickly convert that automatically. They have what's called standing orders to just allow you to do it right away. So check into that, because that could actually add a lot of dollars to your retirement plan. So there's a little post July 5th or July 4th gift there if you aren't doing that right now. That's really all I had for you today. I just thought I would mention that to you. I think a lot of people are missing out on that. Okay, I hope you're having a great day, and we will talk to you later. Bye.